Are you ready for Jerome Powell to do a little bit of a rug pull? Folks, I don't know if you saw the market yesterday. The market obviously ripped higher. Bonds were down. And we seem to be having a pretty big rotation out of the big tech into the Russell 2000. What I was left thinking after the close yesterday is Jerome Powell frankly going to like what he sees? For the longest time, you've heard me talk about Jerome Powell wants to break the Fed put. Jerome Powell wants to yank control away from Wall Street. And Jerome Powell is going to go an extra meeting. As of yesterday, we shared the fact that the market was pricing in 100% chance of a September rate cut. It is my belief that September rate cut at 100% is why we are seeing a rotation out of big tech and into the Russell 2000. But again, I am left remembering Jerome Powell's Jackson Hole speech. I am left remembering my belief, my hope that Jerome Powell wants to break the Fed put, and my hope that Jerome Powell will go one extra meeting. So I'm left asking myself, does Jerome Powell like the animal spirits that were unlocked simply because the market believes with certainty a September rate cut is coming? Folks, as of yesterday, and I realize I am standing on an island all by myself, and frankly, I'm okay with that. That Jerome Powell looks at the animal spirits yesterday and says, you know what? No bueno. No bueno. Not good. We cannot have that. That reinvigoration, that unlock could really be the thing that takes inflation higher again, a la the 1980s. So I believe Jerome Powell looked at it happen yesterday and goes, you know what? The freaking market doesn't get it. I believe if you gave Jerome Powell truth serum last night, he would say there's no chance of a September rate cut, given the market's reaction. Now, again, this is my own opinion. I am wrong all the time. The smart money says I am clearly wrong. They are still at 100%. But I ask you, think about what Jerome Powell's mission has been the last 18 months. Think about how wrong the market has been, right? Don't forget, the same folks that are now calling for a September rate cut at 100% were the same folks that called for 6 or 7 rate cuts in January. I believe both calls are equally crazy. But we are where we are. I do think we will know more July 31st. I believe we will find out if a September rate cut is coming. I believe Jerome Powell, if anything, will do all he can to make it clear. I don't think he wants to surprise the market. He will make it clear July 31st if a September rate cut is coming. But again, I believe if the market, continues to race higher, I believe if the 10-year bond continues to fall, that Jerome Powell will wait just to wait. Why would you cut? Why would you cut rates if, the stock market's at a record high? I mean, it doesn't make sense. So again, we will see what's what. So yeah, I do think yesterday was an interesting day. I think Jerome Powell was probably not very happy with that. So we may have a Jerome Powell rug pull where the market is expecting 100% cut and Jerome Powell says, nope, folks, not September. We will talk about November. And again, I still believe Jerome Powell waits and then the November rate cut is 50 basis points. I believe he will have to cut by 50 in November. So I believe that for quite a while. I believe it more now, but I am standing on a very lonely island. Folks, I don't know if you were a part of school. If not, join today. We had the one and only Henry Washington on yesterday. He talked about how to find deals, how to find money, He answered questions from the audience. If you're a part of school and did not make the live session, it is already loaded. Go to our One Rental at a Time school. Underneath classroom, you will see a thumbnail that says special guest. Click on that thumbnail. Then scroll to the bottom. I think there's 20 or 25 millionaire conversations there already. But you will see Henry Washington at the bottom. And if Henry's team ever watches this, thank you for doing it. It was great to catch up with Henry again. He's wonderful and does a great job of storytelling. We got some economic data today, which is interesting. We got home builder sentiment. We got permits. We got mortgage data. It really is a collection of stuff that's saying, you know what, we might be in that recession that I think started in June or July. Home builders are slashing home prices as confidence falls to a 7-month low. 1/3 of new home sales had a price cut, or 1/3 of builders had price cuts to boost demand. Also, shout out the Uneducated Economist. I don't know if you guys watch the channel. You should. Uneducated Economist talked about the July contract for lumber crashing. Talked about it going, I think, to quote him, it went as low as 418. 418. So again, there's not a lot of mills that will be profitable, if any, at 418. So you could very likely see mill curtailment. What does that mean? Think less supply. I'm just looking at this. I'm just looking at this going, oh no, not again. So we have lumber crashing. We have mills shutting down. We have mills reducing supply. We head to some point later in the year where rate cuts happen, whether it's September, November, we'll see. At some point, mortgage rates gets to the low 6s. We enter the spring selling season next year with rates lower than they are today. And then we have no supply. Have we been here before? I think we've been here before. It's going to get interesting. It's going to get interesting. So again, very interesting. Shout out Uneducated Economist for that data. He works in retail at a lumber mill, so he has on the ground data. He is wonderful. Shout out Logan Montashami from Housing Wire. He was on CNBC this morning. Great little 4 or 5 minute segment. Shout out Logan. Nice job. He's highlighting that we need to watch construction employment, specifically unemployment. Watch construction because, again, we are seeing multifamily construction down. We are seeing residential construction down. This could be a tell of what has come. Logan is talking about we are ready for lower rates. What did he mean by that? Basically, where we are sitting at today, inventory is up more than 100% from the lows. Again, rough numbers. We saw a low of available homes around 230 or 240,000. Today, we are in the high 600, 680,000, 660, something like that. So again, Logan is saying we are in a much better position to handle lower rates. Because why? Lower rates spark marginal demand. Talked about most of the inventory growth could be consolidated in 2 states. Don't let the crash bros fool you, distract you. 40%, roughly half of the inventory growth has happened in 2 states. The states, of course, are Florida and Texas. And again, Logan is talking about how do you fix housing? The interviewer was very interested in hearing Logan talk price crash. Of course, Logan sidestepped that and said, hey, unfortunately, we have a multi-year process to improve affordability, which a big part of that is going to be wage growth. We got some mortgage data today. Mortgage applications were down 3% week on week for purchase mortgage applications, down 14% year on year. Again, remember, I've highlighted that I believe, unfortunately, we may set a cycle low for transactions. The current low is 3.88 million. I think there's a chance that we break that in the next couple of months. Again, mortgage apps being down even as rates fell is a sign that that's possible. We did see refi. Refi apps jumped 15% week on week. Again, rates coming down. There are some people looking to refi. On to housing starts. Housing starts, surprise to the upside. Estimate was for 1.3 million. We came in at 1.35. That was lower than the June total of 1.415 last year, so we were down 4.4%. Never forget, it says housing starts, but housing starts include single family and multifamily. A lot of people see housing starts and they only think single family. Unfortunately, that's not true. The surprise in the housing starts was actually multifamily. Multifamily surprise to the upside. In fact, single family homes, groundbreaking, fell to the lowest number since October of 2023. Again, groundbreaking fall. This makes total sense. We talked earlier about builders cutting prices. We talked about builders slowing down, maintaining margins. We did see building permits increase a little to 1.44 from an expectation of 1.4. However, the biggest number to talk about today is units under construction fell 11%. Again, folks, builders are slowing down. Higher rates, lower demand. So they are getting ahead of this and lowering supply. So what does this all mean? I think my recession call is feeling better and better, right? June or July will be backdated. We won't know till next year. Second, Jerome Powell's November rate cut feeling better and better, even though the market is a 100% September cut. Again, call me crazy, but hey, I'm not changing my opinion. And then finally, for you real estate investors, and frankly, you home buyers, the housing market is going to be slow. If you are a buyer, I don't know what else to tell you other than you want a slower housing market. Why do you want a slower housing market? A, you want time to evaluate, to learn. Two, you want to find motivated sellers. If you were part of Henry Washington's conversation yesterday in school, you heard him talk about finding sellers who have to sell, who need to sell. We are not interested in talking to people who want to sell. That want to sell, going to stay on the market, listing expired, wish pricing, no deal. If you want a great deal, like Henry Washington told us yesterday in school, you want to be working with a seller who needs to sell. Now, of course, as Henry Washington talked about and shared, because he is a great human being, your job is not to take advantage of the seller, but is to work out a win-win relationship that is good for both of you. Again, folks, there is a lot of stuff going on today. There's a lot of wealth building opportunities in front of us. We are seeing more and more multifamily deals blow up, just like I told you they would. Again, a lot of these are the big boys with bridge debt. A lot of LPs are going to zero. Pain is coming. Again, we are in the early innings. Do me a favor, follow me on Twitter or X. It's one rental at a time. In this case, the one is the number. We talked about a lot of things going on in that environment. So folks, I hope you have an amazing day. Please join me in school. It is $20 a month, but you get access to Millionaires questions. You get replays, free education. You're getting a growing community. And if you are on the East Coast, I would love an accountability group on the East Coast. We already have the legendary Frank and Cynthia running the West Coast accountability group. If you're on the East Coast and you would love to initiate an accountability group for that time zone, nothing would make me happier than to see more and more go-givers help people move forward. So let me know if you're up for that. We can talk, we can communicate. We'll see if we'll set it up. Folks, have an amazing day. This is the Daily Financial News for July 17th. Later.